Hello guys, welcome back. It's the last day of the month. It's the 31st, exactly 31st of March, and then we are going into April. And then we have Easter, and then Anzac Day, and that's it. And with the new month comes new projections from Goldman Sachs. I was reading some researches and I was reading some tweets, or X, as you prefer to call it. I think I'm not gonna get used to just saying X, but anyways, I was looking at some X people, some Twitter, some analysts on the Twitter saying that the Goldman Sachs have downgraded the US economy, but we're gonna get there in a second. But before we go to that, I'm gonna run through the week ahead because there's a lot of very important news, very important data points coming out from this week, on this week. And of course, you need to give us a thumbs up. You need to subscribe to the channel because that helps us to continue to grow in delivering this content to you, and makes me happy. So if you want to make me happy, leave a thumbs up and subscribe to the channel. All right. And of course, Tuesday, Wednesday, and Thursday, webinar 5 to 6. And Telegram link is on the description. That's where we send the link to Tuesday, Wednesday, and Thursday's webinars, okay? And that's where I post a lot of content as well. Now, let's get to the video. Okay, so this week ahead, we have a bunch of things. We have RBA, we have NFP, unemployment rate, lots of big things. We have German CPI tonight at 11 p.m. on Monday. So, but before we go to, I want to run down what's actually happening on Monday, Tuesday, Wednesday, Thursday, and Friday. So, for Monday, for those who trade Australian dollar or anything like that, we're going to have the manufacturing PMI from China. And why I say trade Australian dollar and not Chinese one, it's basically because China has a really big relation with New Zealand, Japan, Australia, and any other Oceania countries. So it will affect directly or indirectly the data from China into those currencies. Okay. Then we got German CPI at 11 p.m. expected to have a bit of a cool down. Tomorrow on Tuesday, we have retail sales and the RBA interest rates decision, and the CPI from Europe. That's very important. The CPI is expected to be a little bit cooler than what it was previously, 2.3% previously, and now predicted to be 2.2%. And then on Wednesday, we have the S&P Global Manufacturing PMI, the JOLTS, the Manufacturing PMI from the ISM as well, and the ADP Non-Farm Employment Change. That of course will sort of prepare the land for us coming into Friday. So it's very important to pay attention on those data. And as I say on last Tuesday and Thursday webinar, pay attention on any data coming from US. Pay attention on any data actually coming from any part of the world, because that's going to be really, really important, and that's what's going to shape the market on the second quarter. Okay, we're going to talk in a minute about the Fed. Just hold with me, because what I have to say about the Fed is something that it's very, very interesting, and that's something I've been mentioning around a lot since the January of this year. Even December, I think I've mentioned that. But anyways, let's continue. On Thursday, we don't have much. We just have initial jobless claims, and then on Friday, of course, non-farm payroll, unemployment change, very, very important, okay, really important. I believe we may have some mixed data, but I'm not too sure yet on how. So I will dive deeper into that. I will be constructing some analysis into this on tomorrow, on Tuesday. So come on the webinar that I will be, dicing those parts for everyone that is on there. Okay, now let's talk about Goldman Sachs and let's talk about US. Goldman Sachs has updated the forecast, and now it's predicting a slower growth and a more inflation. So a sticky inflation based on the expectation of the larger tariff hike than they may be expected or originally assumed by President Donald Trump. As a result, they are expecting the Fed, the Federal Open Market Committee, the FOMC as well, to pull forward on interest rates rate cut, and that will bring in 3 total cuts for this year. Wow, surprise. What did I've mentioned already? Exactly what Goldman Sachs is mentioning now, I've mentioned in December, okay? You can go on the channel and look for the videos. I've mentioned that already. There will be 3 cuts this year. It won't be more cuts. 2 cuts, 1 cut done, only 2 cuts left. Okay, that's all we were gonna have this year, and we're not gonna have more. Inflation is too sticky. Inflation, the Fed is trying to combat inflation, is sticky. They can't get it lower than what it is at the moment. It's just varying on that sort of ping pong, going up, going down, going up, going down, but not actually breaking down and continue to go lower. So that will definitely be a very big take onto the Fed decision. Second thing is, yes, there are slower growth than what was predicted because of the tariffs, and that's what Jerome Powell has said. Yes, last statement that he gave to us on the federal interest rates decision. We are already aware of this potential slower growth that it may be impacted by the tariffs. So for that reason, we'll be assessing data dependent and blah, blah, blah. So that would be really important to see. If we look at data, if we look at GDP coming higher than expected, that's really going to be really huge, because all of the market is not expecting to have a bigger data. We're expecting to have it slower until a recession maybe. So if we have a technical recession, that is going to be catastrophic for the USA. Okay, so as I say, there's a lot to go into this week. I most likely will be trading the euro, we'll be trading the Australian dollar, somewhere around those currencies, EURUSD, maybe a potential. We have USDJPY as well from the Bank of Japan. If Bank of Japan says anything about the monetary policy, it would be a good trade to short USDJPY. But let's continue to monitor the markets. Watching those videos is really good for you, because I'm always here bringing the updated news, updated headlines, and it makes, in my opinion, it makes much more easier for navigate the uncertainties of the market. Guys, thank you so much. I hope everyone have a beautiful week ahead, and I see you tomorrow on the webinar, or I see you tomorrow in the next video. But if you have any questions, bring to the webinar. It's always good, it's always nice to have people asking questions, and that interaction is really a welcoming, friendly webinar live. I think you will like if you haven't participated yet. Thank you so much. I see you tomorrow, or I see you in the next video. Bye bye, guys.